Billboard, baby, do a leap and make them dance when it come on. Everybody looking for a dance floor to run on.
If you wanna run away. Both Ajinomoto Malaysia Berhad and 3A Resources Berhad are companies that serve consumer products and services under food and beverages. I have chose to use the profitability ratio to analyze these companies' financial statement. Profitability ratios are used to measure the ability for the companies to generate earnings relative to its revenue, operating costs, balance sheet assets, or shareholders' equity over time. Under profit margin, we have another three elements of margin to be calculated, which are gross profit margin, operating profit margin, and net profit margin. Okay, first of all, we want to find the gross profit margin. The gross profit margin is used when we want to find the percentage of each sales ringgit that left after we paid for goods. So the way to calculate it is by dividing the gross profit with sales, then times with 100. Gross profit, we can calculate the gross profit when we minus revenue with cost of goods sold. But from here, I can directly take the gross profit from the annual report. After the calculation, I found out that the Ajinomoto Malaysia Berhad's gross profit margin is 16.84%, while 3A Resources Berhad is 17.62%. This shows that 83.16% of Ajinomoto Malaysia Berhad's profit were used for the cost of goods sold or to manufacture the product, while 17.62% are left for other expenses and net profit for 3A Resources Berhad. Since 3A Resources Berhad has higher percentage of gross profit margin, it means that it is producing its product more efficiently than Ajinomoto Malaysia Berhad. Okay, next is operating profit margin. Operating profit margin is used when we want to know the percentage of each sales ringgit remaining after we deduct all the costs. Example of the costs are taxes, interest, and preferred stock dividends. It also may be called as pure profits earned on each sales ringgit because the profits have been clearly deducted by the expenses and costs. The way to calculate the operating profit margin is by dividing the operating profit with net sales, then times by 100. So from the calculation, Ajinomoto Malaysia Berhad's operating margin is 19.33%, while 3A Resources Berhad is 9.48%. The 19.33% indicates that Ajinomoto Malaysia Berhad generated 19.33 cent operating profit for every 1 ringgit of profit, while in the other hand, 3A Resources Berhad generated 9.48 cent operating profit for every 1 ringgit of profit. It shows that Ajinomoto with higher profit margin ratio makes more money on each ringgit of sales than 3A Resources. Okay, so the last element in profit margin is the net profit margin. So the net profit margin is used to measure the percentage of each sales ringgit remaining after all costs and expenses, including interest, taxes, and preferred stock dividends have been deducted. So the way to calculate it is by dividing the net profit with total revenue and times with 100. From the calculation, we know that Ajinomoto Malaysia Berhad's net profit margin is 12.96%, while 3A Resources Berhad is 6.92%. The 12.96% profit margin indicates that Ajinomoto Malaysia Berhad earns 12.96 cents in profit for every ringgit it collects. At the same time, 3A Resources Berhad earns 6.92 cents in profit for every ringgit it collects. It shows that Ajinomoto Malaysia Berhad is better than 3A Resources Berhad in converting its sales into profits. Next is asset turnover, which indicates the efficiency of the business in using its assets to generate sales. The formula is net sales divided by average total assets. To get average total asset, you need to add the beginning asset and ending asset, then divide by 2. So, the asset turnover ratios for Ajinomoto Malaysia Berhad is 0.83, while 3A Resources Berhad is 1.04. This indicates that every ringgit in assets, Ajinomoto Malaysia Berhad generated 83 cents in sales, while 3A Resources Berhad generated 1 ringgit and 4 cents in sales. A higher asset turnover ratio indicates that 3A Resources Berhad is efficient in using its asset than Ajinomoto Malaysia Berhad. Let's continue with ROA that used to measure the overall effectiveness of management in generating profits with its available assets or its current asset. So, the formula is to divide the net income by average of total assets. So, the answer for Ajinomoto Malaysia Berhad's return on asset is 0.1031, while 3A Resources Berhad is 0.0698. It means that every ringgit that Ajinomoto invested in assets generated 10.31 cents of net income, while every ringgit that 3A Resources invested in assets generated 6.98 cents of net income. It shows that Ajinomoto Malaysia Berhad was better at converting its investment into profits compared with 3A Resources Berhad. Other than that, we also have ROE. If we want to calculate ROA, we need to divide the net income with total asset, right? So for ROE, we need to divide the net income with shareholders' equity. After calculation, we know that ROE for Ajinomoto Malaysia Berhad is 0.1208, while 3A Resources Berhad is 0.0823. It shows that for every ringgit of shareholders' equity, Ajinomoto generated 12.08 cents in profit, while 3A Resources Berhad generated 8.2 cents in profit. This shows that Ajinomoto Malaysia Berhad's management team is better than 3A Resources Berhad at utilizing company equity to generate profits. For EPS, it is actually same with ROE. Even the formula is different, which to get EPS, we need to divide the earnings available for common stockholders with the number of shares of common stock outstanding. However, the amount will be same as ROE. Yay, we're almost done. Okay, next is PE ratio. To get PE ratio, we need to divide the price per share with earnings per share. So the price per share, we can get it from the Bursa Saham Malaysia's website, okay? So, PE ratio for Ajinomoto Malaysia Berhad shows that investors willing to pay 13 ringgit and 21 cent to the company in order to receive 1 ringgit of that company's earning. In the other hand, investors willing to pay 13 ringgit and 63 cent to the 3A Resources Berhad in order to receive 1 ringgit of that company's earning. 3A Resources Berhad shows that their stock's price relative to earnings and possibly overvalued compared to Ajinomoto Malaysia Berhad. Lastly, dividend payout ratio, which is DPR. To calculate DPR, we need to divide the total dividends with net income, then times with 100. A 51.12% dividend payout ratio shows that Ajinomoto is paying out 51.12% of its net income to shareholders, while 3A Resources Berhad is paying out 35.7% of its net income to shareholders. It shows that 3A Resources Berhad pays out a smaller percentage of its earning to shareholders as dividend, giving it a more sustainable payout ratio than Ajinomoto Malaysia Berhad.
This ain't no debating on it. I'm still levitated, I'm heavily medicated. Ironic, I gave him love and they end up hating on me. She told me she